We are focusing on shares of Singapore-listed Wilmar at this moment, just off fractionally 0.5%, 6 Sing dollars and 57. Of course, a one-off gain helping the world's largest listed palm oil company post a better than expected 35% jump in third quarter net profit. This even as revenue fell nearly 25%. We're going to try to find out what is happening in the overall commodity space with Nirgunan Tiruchelvam. He is equities analyst at RBS, who joins us right here on set. Well, thank you so much for coming in today. Give us your thoughts about where the commodity space stands at this moment. Of course, the weak dollar and the China story still very much a key theme. Is now still a good time to get into commodities?
Yes, I think there are two factors at play. Number one, as you said, the China factor, which is that China continues to consume very large quantities of industrial and agricultural commodities. So there's no sign of the stockpiling abating. In fact, the Chinese authorities have used the opportunity that they had at the beginning of the year to acquire some very large commodity assets as well.
So soft commodities hotter than, for instance, like coal, copper. What is your view?
I don't want to comment on the relative merits of them, but soft commodities are definitely a hot commodity right now because we are facing a shortage of a number of soft commodities. We expect palm oil to be in shortage next year because of some very dry weather, principally from El Nino. And this would apply to soybeans as well, which is facing a drought in Argentina.
I see. So the specter of dry weather, possibility, growing likelihood of El Nino, and how much are these factors going to push up soft commodities such as palm oil and, for instance, soybeans?
I think we will at least have a run-up of about 15 to 20% over the next year and a half. So the outlook is very strong for both these commodities. What's more interesting is that the plantation stocks seem undervalued. They may seem fairly valued in terms of their PE multiples, but if you adjust that to the growth expectations, a lot of them are trading at a PEG ratio of less than half the Indonesian or Malaysian market, which is very interesting.
Okay, we're going to come back to soft commodities, but I also want to talk about Wilmar, especially after they posted that better than expected 35% despite lower revenues. What does this tell you about Wilmar?
Well, I'm not in a position to speak explicitly about our recommendation on Wilmar. However, Wilmar has traditionally been a very strong way of playing the whole commodity theme. It is a processor, it is a producer, it is the preeminent player in soybean processing and palm oil processing. So it would be a very interesting opportunity if anybody wants to pick up soft commodity exposure, given its dominance of the whole industry.
Absolutely. What about its Hong Kong IPO?
The IPO is an interesting opportunity as well because the IPO is expected to cover some of the soybean processing assets that they have in China as well as the consumer packaging opportunities. So it would be an interesting way of playing the whole agriculture theme.
I see. And, you know, you've been advocating buy into soft commodities since the March lows, which means that you have been very, very spot on. What about sugar? For a while, we were talking about how India and its consumption for sugar and the dry weather there, and the drought and the floods and so forth.
Exactly. So the environmental or climatic conditions are causing a shortage in a number of soft commodities. Sugar is one of them. Palm oil is expected to be the next one. Soybeans are suffering a shortage of supply. So this is taking place at a time where China is consuming more of these commodities. So the outlook is very strong for a number of soft commodities.
We've got to go, but can you give stock picks?
Yes. I would recommend Indofood Agri, which is a plantation stock listed here in Singapore with operations in Indonesia. We have a buy recommendation on that.
Okay, only one.
Yes.
All right, thank you so much for your time today. Nirgunan Tiruchelvam from RBS.